Monday, January 9th, 2023, market analysis, Stan Ehrlich. Hi, good morning. It's a little late today. It's almost 11 o'clock California time, so got a couple of hours of trading left on the standard hours. I want to spend a little bit more time today talking about something, and that is a possible long-term bottom developing in the next few weeks, maybe, in the stock market indexes. I'll outline the details. We'll see if it develops that way. But for the moment, I got what I wanted. I talked about this market rallying and breaking out on Friday to the upside after a 3-week sideways trading range. I hate those. They're boring as heck. And it did get up to the 93 area. Today's high is 93.70. Correct, 393.70. So I wanted 93 to 95.50, and I still might get 395.50 in the next few days. That's not out of the question. But at least I got my resistance area tested, which is what I wanted at a minimum. Now, this week, I think we're going to have a high and start to head back south again. As to how high, again, maybe today's high is it. It's certainly the first place I would expect it to run into problems. That does look like it has started to slip a bit more than I would have guessed, but nothing, terrible or unusual. There is a tiny 10-tick gap between Friday's high and today's low, a little bit larger one on the QQQs, but nothing in the DIA or the Russell 2000 as far as gap up is concerned today. And today's not over, so the gaps could still be closed. So now what? Again, maybe 395, 396. I'm saying 395.50 to be a little bit more accurate. And that this week, or today's high is it. I just don't know yet. I certainly wouldn't go buying anything at the moment, like the spider or something. I'd be looking for reasons to believe it's going to start to turn down again. Why? Ladies and gentlemen, there's a possibility that there's a giant head and shoulder bottom building in the stock market indexes. I've referenced this slightly in the last couple of weeks, but I'm going to go into more detail here. The first shoulder low in general for all the indexes is June 17th, and then October 13th, the whopping ER bullish buy signal, automated 100%. The system caught the turning point so far. Is the head of the formation. Now, you normally measure from the shoulder low, all time-wise, until the head of the formation, then that's X number of hours, days, months, whatever, and duplicate that into the future, and you come up with the date of February 8th. So I have a date that I'd love to have a bullish engulfing ER buy signal on, and normally, head and shoulder bottoms have shoulders that are around the same price levels. So something in the ballpark of the high 360s is the best I can come up with, which is the middle of this circle. So I'm giving it a week or two early or late as far as the timing is concerned, but the middle is the perfect day. And I'm giving a little bit of zone of price range vertically. And I'm hoping that somewhere in the circle is a turning point. We'll see what happens. I've done this before. I'm not always right, but this is the best shot for it. So that's why I'm really not expecting too much more strength in the stock market indexes during this next few days. And I think it's going to turn around and start to head down very soon. This is the 1-minute chart on the S&P 500 this morning, and the latter part of Friday. So there's that little tiny gap right in there from the high of Friday to the low of this morning, only 0.10. And we came down to this low a few minutes ago, and now starting to bounce back up again. I can't, I'm still questioning whether today's high is it or not, and I'm not sure. I'm going to vote on the side of today's high at least is going to be tested, if not a slight higher high. DIA, the Dow Jones, the same pattern can develop here, of course. And in this particular case, we're looking at June 17th for the shoulder low, which, by the way, was a head and shoulder bottom all by itself. Past tense, long gone, forecasted it, look for it, and I'm doing the same damn thing with simply a larger version of what happened back in May, June, July. which worked really, really well. You listen to my recordings back at that time period, you'll hear them. The head of the formation is a double bottom, making it a little different as far as the measurement time-wise is concerned. Instead of October 13th being the measuring point, like the spider and the QQQs, it is going to be the average price time, between the two lows, which are almost exactly the same prices. So that's a little double bottom. So you take it up to October 6th, let's say 1 week earlier. So if you forecast from that date, 1 week less time frame into the future, you don't come up with February 6th, I believe. You come up with something like the 1st of February, or maybe the last business day of January. I don't know what day of the week it is. But you want to move it, actually, I'm sorry, 2 weeks earlier, not just one. So you come up in during the last week of January for the last low, potentially of the DIA. Of course, the first week in February is not being ruled out. Next, the QQQ is a little more straightforward because it's got the October 13th lows sticking out like a sore thumb, like the S&P. Fantastic key reversal. I might mention with my trading system, I normally get 5-10 signals a day out of the stocks that we scan for, and that's just the stock area. And on October 13th, I got 98 buy signals. That tells you something about the profoundness of that particular day, and I screamed bloody murder on that day also. You'll hear it if you go back to that recording. Now, the low we just saw a week or so ago got oversold. Well, I don't recall. Yeah, I think at the very beginning of the 3-week sideways trading range, we were a little oversold for a day, and the other indexes as well. But this is the lowest low in this particular case on the Qs, but it's very close to the lows in October. That really doesn't fit very well with the last shoulder low. In fact, as you know, I'm still looking for, I'll squeak in the last week of January, but mostly it's the first week of February as the time frame for my last shoulder low, which should be lower than last week or two. And if that's true, wow, we're in the verge of collapsing on the Qs because it could make new lows for all of last year and more and into the new year. That doesn't bode well. Of course, it depends on how it does it. Big volume, big hard down day, closing way below previous lows and all that good stuff would be very bearish, but not yet. I'm not saying that's going to happen. I don't think that's going to happen. I'm looking for the signs, the telltale indications that we have a turn back up again, and it is going to be within the next 4 weeks, I hope. 3 to 4 weeks from now. That's enough for the stock market indexes. So the rally I was looking for has happened. It may make a minor new high, higher than today's high soon, but I don't think it's going to carry any further. And I do think we're going to see the market work its way back down somewhat in the next few weeks, as I've been alluding to. Futures, markets, here we go. Corn caught a great sell signal a few days ago, last week. Came down very nicely for 2 days, and now we're going sideways for a couple of days. I do think we're going to see lower lows. I'm bearish, and I think a test of the previous low, which was a bullish engulfing ER buy signal, green, beauty. So I think we're going to test that low, and that buy signal, by the way, lasted about 2 or 3 weeks. From what do we get? 635-ish up to about 680. Yeah, not too bad. But now the trend may be changing on a shorter term basis, as probably has. And I favor the bear side of the market. Next chart is cocoa. We got a sell signal last week, early last week, maybe even the last day of the week before that. What was the date on that? That was the December 28th. Okay. So now we're making new highs. So it worked for 3-4 days, and that's fine. This trading system I've developed, ER signals, is meant to pick turning points in markets that can last only a few days, hopefully at a minimum, but that's plenty of time for scalping, swing trading. And maybe if someone believed that the signal was a profound one, like October 13th, then long-term investors would be very interested. but deciding that a signal is really profound is a little tricky. October 13th was pretty easy, in fact. Next chart. Bean oil. Caught the bottom, green. Big sideways trading range and a very large pennant formation for most of last year, and we're not out of it. So I have to be somewhat neutral. I wouldn't be surprised if we challenge 67 and a fraction or a little higher in the next week or two. Next, live cattle, friendly, a little bullish. Oh, that's a double pun. Cattle, bullish. Okay. Next, platinum. No, we're going to go. Did I skip something here? Yeah, platinum, bullish. Next, natural gas. How can you not be bearish? But it got oversold. So we're going to see a rally first, probably a little bit above 5, somewhere between 5 and 6, I think. And then as the next few weeks develop, a lower low. Next, high-grade copper. Short-term friendly. We got a bullish breakout today, but unfortunately we're overbought at the same time. That may not stop the rally. We could see a little more strength for a couple more days. We're not yet up to resistance. Oh, we just barely touched it today. But you also broke out of a more recent trading range, so that's more important. I think I'd be looking for maybe 4.5 something. Next, wheat. You know, we caught the top of the wheat market at the beginning of the war when wheat went screaming higher on a series of limit up bid days, but our system caught the top. This is all automated. I don't do anything on purpose here. It just finds them, and a great sell signal there. I have to be neutral to bearish. Trend is down. Next, hogs. Oversold today, first day during this particular fairly sharp decline. So I'm expecting it to stall out, flatten out, and start to turn up a little bit this week. Next, but the trend is pretty much neutral, sideways. That's hogs. This is coffee, bearish, looking for a test of the lowest lows. I don't think we're going to end up with a triple bottom or something. The trend is definitely down, and I'm looking for new lows real soon, probably this week. Next, OJ. There's a possibility of a top formation in here, and we could be at the last shoulder high of a not that great head and shoulder top, but all the body parts are there, and the timing is good for the last shoulder high as well. But it's very, very neutral in most aspects, and that's not unusual for the last shoulder, bottom or top. Next, soybeans, neutral. Next, heating oil, neutral. Next, the E-minis, just like the spider. I'm expecting it to stop rallying and turn back down again soon, probably this next week. I'm not quite sure whether today's high is the highest high for the rally, but I don't trust the rally. It already tested resistance and stopped today. So I got what I wanted and I got what I forecasted. Not sure about the next few hours or day or something. Let's see what happens. But I do think it's about to top out and this week and start to head south. Next, sugar. Oversold the last couple of days and today as well as Friday, and closing stronger today. We probably have a short-term bottom. 20 might not be out of the question at all in terms of rally potential. Next, bonds. I've been alluding to bonds and 10-year notes to be making some sort of a long-term bottom formation. I can't come to a conclusion as to what it's going to be as yet, and we don't really have anything. There's one or two possibilities, but they're not as well developed as I'd like, and I really don't want to talk about something unless I think it's worthwhile. So I'm starting to become less bearish and more neutral on bonds and on 10-year notes. Same thing here. Same basic formation, just different numbers. Gold, bullish, but close to being overbought. I wouldn't chase the market to the upside. I'd be looking for some sort of a downside correction soon, but I'm still bullish. The trend is up. Major long-term bear trend lines have been broken, tested, new highs over time, higher lows over time. Looks good. Next, silver. Same basic comment, but neutral momentarily. But the trend is up, and I'm bullish, looking for a reason to jump in. Next, crude. Slowly bearish. Nothing here that would cause me to get overexcited one way or the other. We just topped out a week ago, last week that is, with a bearish engulfing, although I didn't get a sell signal with my system. It's because it wasn't quite overbought as much as I would have liked. Well, that's it, period. Next chart. Soybean meal, down day, trend is up. I'm still bullish. Next, corn. We started out here with that sell signal last week that's been working very, very well. That's it for today. Stan Ehrlich, profitable trading to you. Off, signing out.